Hello and welcome back to FANG Friday. This is Ross Healy, Chairman of Strategic Analysis Corporation and Senior Portfolio Manager at McNichol & Associates Asset Management. If you like to never miss a FANG Friday video, make sure to subscribe to your YouTube channel and like this video. Hit that little bell symbol for an email notification. Well, this week I want to briefly highlight my time on BNN's Market Call with Anita Sharma on Tuesday of this week. You'll know, if you were watching, that right in the middle of the show, we had the attacks by Iran on the U.S. bases in Iraq. And the market responded with futures plunging and gold ripping just above 1,600 for the first time in almost a decade. However, as I said on the program at the time, things should settle back a bit, and they have. But that event just goes to show how volatile markets can be, and that one should be ready when markets do start to become manic. Speaking of which, I was pleased by the audience response. I received a number of new followers on Twitter and subscribers to our YouTube channel. We even got a couple of new clients who decided to try our advisory service. Partly because of this, we are planning a special addition to our service, which I think that our FANG Friday viewers will really like. But I will have to wait for next week to show you. But there will be something special for the first 10 viewers who like, comment, or retweet our FANG Friday video. As I said, I can't show it till next week, but I think you'll want to tune in. Anyway, let's go and take a look at the FANGs. So the first FANG that we always start with, of course, is Amazon. And here is a picture of the last 6 months of Amazon. And of course, what we notice here is that for months and months and months, the stock remained sort of stuck in a very, very narrow range, only recently breaking out. I have to congratulate Mike, one of our viewers, for actually realizing that if the market was going to break out, the biggest stock in the index, which is Amazon, would have to break out with it. And of course it has. Now, it hasn't exactly been overwhelming, but look, it's a nice little gain. Turning to Facebook, this was kind of interesting. If we go back, the highs for the market before the breakout happened on November the 23rd, I believe, and here was Facebook sort of moving upwards as the market moved to its then peak. And then, of course, following that, the market set back. And here, of course, is Facebook doing exactly that. But on December the 12th, then the stock market actually broke out, and with a little bit of a lag, see there, a little bit of a lag, it's pulled Facebook up with it. Now, I've said to you before that the interesting thing about Facebook is that the slope of the MSG price, that's 5.5 times book value, but the slope of our structural lines is running about a 16% per annum basis. So as long as the shares kind of stick to that line, then just being there gives you a fairly decent rate of return. And of course, more recently here, we've got not only a breakout over the line, but the stock has actually begun to move up with the market, so giving you kind of a little bonus. The next stock that we want to look at is Alphabet, and Alphabet's quite interesting. And look at this, all the way along. It got up to its low super growth price. That's 4.5 times book value. Wouldn't break out, and then look, Just in the past 4 days, the stock has moved back up to the line and broken out. So that would be potentially a buy signal for a further move in the stock. However, let's not get kind of too carried away, because if I take a longer view, here's the 2-year view of the company, you can see that the last couple of times it's broken out, it's had a move all right, but maybe only about halfway to the mid-super growth price. So I don't know whether the stock will be able to do any more than that this time around either. And of course, if I take a look at the very, very, very long term of Alphabet, what we can see is that the stock has been pretty much confined between the mid-super growth price at the top, largely the super growth 3.5 times at the bottom, but with little side trips every now and then down to the mid-growth price. So the stock may be breaking out, but how far it can go, actually at this juncture, I really don't know. I would be somewhat surprised if it could get up to the mid-super growth price. That's 5.5 times its book value. Turning to Nvidia, well, Nvidia has run right up against its HB2 price, and here we are back with the market breaking out in about the 12th of December, and Nvidia goes right up to the break point. That's the HB2, which is 12 times book value, but so far, at any rate, it has been unable to get any further than that. And of course, part of the reason for that is the fact that that was the rebound high back in early March of 2019. So it stands to reason that it would get up to its old high and then hesitate before going any further. Going, of course, with you, if you like, is the fact that the fair market value, that's this dotted line here, the fair market value is rising. Admittedly, look at the fair market value potential, minus 51%. This stock is very, very much overvalued. And as Fred Hickey of the High Tech Strategist says, he is somewhat baffled by all of the semiconductor stocks that they've done so well when their sales and earnings have been so poor. But anyway, SVA is not there to argue with the market, but to try to make sense of it and see what the market is actually trying to tell us. So, no breakout so far, but watch, say, $250 and see if Nvidia can head any further, in which case maybe it's got further to go. Now turning to Netflix, well, let's go back with Netflix, and of course here was that previous market high at $31.50 before the market set back in about the 23rd of November. The stock burst out over its HB3, but then set back. And then here, of course, we're coming right back into that breakout point, and now with a little lag, then Netflix is following the market up. Now, it's not exactly running away, but on the other hand, I'd also have to say that the odds, if the market continue on higher than this, the odds are that we probably should get up to the HB4 price, which is about $380. Apple, well, what can I say about Apple? Apple just keeps on going. Never mind the fact that its earnings and sales have been indifferent. Who asked you anyway, Ross? The market just keeps on wanting to drive this stock higher and higher and higher, and it is. Do I think it'll get beyond the HB2? That's $330 a share. I think it's going to be tough to do that because the market will be very, very, very extended. but and furthermore, of course, not only extended, but the fair market value is now already 32% lower than the current price. What of course is going for you is that Apple has been buying back stock. Although as of the last balance sheet that we've got, you can see that the balance sheet values, that is the price, that's the book per share, which is what all of our structural prices show you, and show you the trend. The trend has been higher. So it'll be interesting to see what happens when we get the next balance sheet. Finally, we have Microsoft, and I have been somewhat concerned about Microsoft because the HB1 price, that's about 10 times its book value, that was not only a major peak for the stock, but the fair market value was very substantially lower than that price. So here we go back to the previous high, the November the 23rd level peak at 31.50. Yeah, the stock breaks out, but quickly pulls right back again because it really doesn't want to go anywhere. But lately, with the market getting stronger and stronger and stronger, well, you can kind of see Microsoft trying to gain altitude, can't you? It's as I say, it's not exactly setting the world on fire in doing so, but it looks as if it wants to head higher. Anyway, well, that was this week's look at the FANGs. If you want to learn more about our revolutionary proprietary charting system, you can visit www.strategicanalysis.ca, or frankly, give me a call at 416-489-3604, extension 133. That's my personal line. Be happy to talk to you. Or, better yet, if you live in the Toronto area, come on down to our offices at 130 Bloor Street West, and let's have a chat about how our investing tools can make you a more confident investor. Next week, my research associate Gilbert Enanager will be providing a brief overview of the potential for more volatility in the market. So stay tuned if you think the markets are rather frothy, as one of our commentators mentioned recently. Anyway, this has been Ross Healy, the chairman of Strategic Analysis Corporation, black hole economist, and senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.